Hey guys, Eric Martel here, and today I'm going to talk about China's economic crisis that has been all over the news lately. And you might be saying to yourself, who cares? It doesn't affect me. It's all happening in China. But the truth is, China is the world's second largest economy, very close in size to the US, and an economic crash is going to have real consequences for the rest of the world. I'm going to explain what exactly is happening in China, the major drivers of China's economic crisis, the US-China economic relationship that generally favors the US, and exactly how the US economy could be affected. But first, make sure you like and subscribe to my channel because I'm making videos every single week that are going to be helping you protect your money and find the deals to be had as we head into a potential world downturn in the economy. So first of all, what in the world is happening in China right now? China's economy has grown to be one of the largest in the world, second only to the US. And they're very much on the brink of a financial collapse, which of course would affect the rest of the world. After digging in and doing my research, I'm sorry to say that I found things were a lot worse than I expected. The threats to China's economy are rising, and it all starts with one thing: real estate. Real estate, of course. Chinese real estate developer defaults are getting out of control. Last year was a record number of defaults from Chinese developers, with the most famous one being Evergrande, which owes $300 billion. But Evergrande is not the only one who defaulted on their debt. Standard & Poor's estimate that between 20 and 40% of Chinese developers may face loan defaults. That's right, nearly half of all property developers in China may default on their debt, and that would be enough to make any economist worry. But that's just the tip of the iceberg. These property developers don't just owe money, they also owe 1.4 million apartments that they're supposed to complete construction on and that they have defrauded investors and homeowners out of. This is probably one of the biggest Ponzi schemes I have ever seen, and it will no doubt affect all of the incredibly inflated Chinese real estate. Chinese developers would buy a piece of land and start selling apartments on it before it's even built. The unusual part is that the buyers in China are able to get a mortgage for the full amount of the apartment and start making payments on this apartment even though it hasn't started construction. Here in the US, normally you would put a down payment for the apartment, and then once the apartment is built, this is when the full amount of the mortgage would be issued, and then you would start making payments at that point. I've heard of risky loans, but this is something else. This is paying someone for a product in the hopes that they will make it for you, and you have to start making mortgage payments even while it's being built. Most of the money that the developers receive would not be used for construction because there was no regulation. There's no wonder why property values have doubled and doubled over the past few years, and people have been paying almost 23 times their yearly income just to buy one of these homes. This market has been driven by imaginary demand and people owning homes that don't even exist. For these developers, the new capital of buying homes has held up their business built on a house of cards. They would use the money from the home buyer to buy the next property and spend the least amount possible on the house construction. As soon as the money stopped rolling in for new home purchases, they no longer have enough money to pay for finishing the construction on these apartments. And now nearly all 10 of China's biggest developers are in default. It was all a Ponzi scheme. This guy would pay the developer would buy land so that they can sell to more buyers, and then they would give more money so they can buy more land to sell to more buyers. But really, the money never flowed to the actual constructions. And now we're in a situation where we have 1.4 million apartments that are left unfinished, and there's no money to finish the construction. Real estate and property development accounts for 25 to 30% of China's economy. It is one of the only ways that Chinese workers can build wealth. Any significant real estate downturn would have a devastating impact on the Chinese population. And this may cause real civil unrest and political challenges. Things are about to get real interesting all over China. So when the real estate market collapses, it also puts down some serious pressure on the banking system. Now, when these developers default on their loans, banks have to foreclose and try to resell these properties to regain their investments. So imagine this, the banks are going to try to repossess buildings from these developers, and these properties are not finished. So the banks are going to try to sell unfinished apartments. And they're probably not going to be able to sell them at all. And these banks were propped up by mortgage payments from the Chinese people that were paying for these real estate investments. So things are escalating fast. Rural banks have frozen almost 40 billion yen, or about $2 billion, that has been given out to developers. And one of the largest groups of home buyers in China have threatened to boycott mortgage payments on any unfinished real estate investment. These boycotts of mortgage payments are growing around China. And many investors and homeowners are demanding that the Chinese government refunds their investments for these millions of defrauded properties. So what is the Chinese government to do in this situation? How will the Chinese government get out of this situation? Most likely, their only recourse is printing more money, which will reduce the value of the Chinese currency worldwide and impact international trade. Beyond this, China has been buying up land in order to try to keep the real estate market stabilized. But there's only so much they can do for millions of houses built on broken promises. So what's going to happen when Evergrande and other real estate developers finally go bankrupt and this finally comes to a head? Well, that is going to happen very soon. Basically, everyone who bought shares and bonds of Chinese real estate developers are going to lose it all. These investors fall into two groups. The first group are domestic Chinese investors, and the second group is foreign investors, mainly institutions and funds. So when these companies do go under, this is going to hit the world financial market like a truck. Were people really investing in these companies? Yes, lots of them. The value of Evergrande's shares was as high as $4 in 2017 and now sits at 13 cents. There's no way around this one. This money is gone. All these investors who jumped on board to get some of these skyrocketing values are going to be left with nothing. What about corporate bonds? They will likely pay their own country's investors first before paying out international investors. This looks like international investment funds are likely to lose all their money. Some of you are probably saying to yourself, who cares? These are probably some no-name banks that invested. But unfortunately, some of these names are going to shock you. Some of these American shareholders in Evergrande have huge stakes. Here are the biggest American shareholders: Vanguard, Schwab, iShares, and unfortunately the list goes on for American funds caught up in this mess. These are some of America's most trusted funds, and they're all over retirement accounts, IRAs, pension, unions, you name it. America's largest funds have played follow the leader right off a cliff. When these go down, it's going to affect a lot of people. So if the Chinese economy collapses, why will it affect the US economy so much? And the reason is we're handcuffed to China in three main areas. First, US-China trade. So China and the US are each other's biggest trade partners. US companies exported $124 billion in goods to China in 2020. So if the Chinese economy slows down, then the demand for US exports will also go down. And this would impact commercial aircraft, automobiles, and food. But the reality is the US is importing way more stuff from China than China is importing from the US. We are importing computer chips, cell phones, clothing, and toys from China to the tune of $434 billion worth in 2020. So what will happen to US trades if the Chinese economy collapses? On one hand, it would be a significant decrease in US exports to China because they wouldn't be able to afford these goods anymore. We import a lot of things from China, so how is that going to be affected? Since the Chinese currency will most likely be devalued, this means that the cost of producing goods in China would be significantly reduced. This means that American companies could send more jobs to China, and that would be very bad for our economy. Second, US debt. China is the second largest holder of US bonds. As China's exports to the US decline, its government has fewer dollars on hand to purchase some of them. When the demand for US bonds go down, the interest rate goes up. A higher interest rate would slow down the US economy, government spending, and real estate, the same way that you can see the Fed rate hikes have slowed down demand. And lastly, the US dollar. So what will happen to the US dollar? Since exports to China will go down, this will reduce demand for the US dollar because American companies want to be paid in US dollars. So if we export less stuff to China, that means that less Chinese people are going to have to convert their money into US dollars. That means a reduction in the demand for US dollars. Phew. And now the moment you've all been waiting for. How will China's economic crisis affect the real estate market right here in the US? It's a simple, sad fact. When Chinese people have less money to spend, they will buy less American real estate. And when the demand for real estate goes down, the price goes down with it. And the thing that makes it even worse is that you should expect mortgage rates to go up as well. Since the Chinese government is going to have less money, they're going to buy much fewer US bonds. And that's going to drive mortgage rates up. And of course, when mortgage rates go up, the demand for real estate goes down. And finally, we should also expect the Chinese crisis to increase inflation, especially for oil and gas, which will drive the overall inflation. Which means the cost of housing materials and appliances will rise drastically. It's going to make expensive housing even more expensive. The Chinese real estate crisis is going to cause the real estate market here in the US to go down. But I don't think it's going to crash. I don't think it's going to go down 25 to 50% like a crash, but it is going to go down. The reason why I don't think it's going to be a crash is because I'm not seeing a big sign in there that says we're going to have a massive increase in supply. I'm seeing a lot of indications that the demand will go down, but I don't see anything out there that says everybody wants to sell their house all at the same time. And that's what you need to have a crash. You need a massive supply. Everybody wants to sell their house at the same time, or you have massive foreclosure, and then you have nobody that wants to buy them. That's a crash. But brace yourself, it's going to be ugly, but we're going to be okay. Please make sure you like and subscribe, because the more people like this video, the more people are going to see it. Take care, everybody, and see you real soon.